Good morning, welcome to the Phoenix Blue Morning Update on Tuesday the 14th of June. I'm Tom Colley and I'll be talking you through the news in the markets this morning. Starting with the news, well, the Fed rate announcement tomorrow night is what the whole week's about. We are not trading any long-term trades at the moment on FX. Anything we are taking is purely intraday. News for today. We have the consumer price index at 9.30 for the pound, and then retail and core retail sales for the States. That will play into the FOMC statement, I'm sure, simply because the meeting prior to the statement lasts for 2 days. So I'm sure they will be taking account of these numbers in that meeting. Okay, with respect to what's happening in the markets at the moment, over in the Far East, we've had a further sell-off on the Nikkei, the Japanese equities market. Also, this is the Shanghai Composite, this is the Chinese equities. We had a big bearish day yesterday. I have to admit I missed this yesterday because when I recorded the morning update, price was down but not significantly, and it dropped very strongly into the close. We've seen a less or a non-bearish day, more of a doji holding day here, quite possibly that Chinese government intervention, which always affects this market. But what I'm highlighting there is we've got equities selling off in the Far East. We've also seen equities selling off across the world prior to the Fed announcement. Over on the US dollar JPY, the yen, again we've got yen strength into this level at 105.50. We do anticipate potential intervention at that point. We won't be trading that today because of the Fed announcement tomorrow, but we will be watching the level with interest. But again, this is reflecting a risk-off scenario with money coming out of the Nikkei equities and into the safe haven Japanese yen. Over on the dollar index, well, yesterday we had a bit of a sell-off. We had dollar strength through the back end of last week. We've had a pullback down to this level at about 94.50. And today we've seen a slight recovery from that. We don't expect to see a lot more move outside the range of yesterday's bar today prior to the FOMC statement. This is one of the reasons we're staying out of FX, being that there is a lack of direction in the market. There's also higher volatility brought about by lower liquidity. Crude oil, WTI, well, we've had a sell-off all through last week. We had a break of this trend line here, which is actually the lower half of a rising wedge as well. I have to admit I've been watching that level a little bit too consciously. It was such a superb level on Friday that I over-focused on that yesterday, and I missed the opportunity through at this level, where we've got a perfect high test bar there touching in at around 49.20. I'm now looking for a break below the 48.35 type level here and a retest down here into this level, and I'll be targeting the lower round this level at the $43 type level. So looking for a break and a retest of that. Now, we've already mentioned equities, sell-off across the world. This is the S&P 500. This is an absolute mirror of what you'll see on the other US equity markets. Again, a big sell-off day yesterday. You can see we're positioned here at this key level, 2085, looking for a pullback to that level before continuing short. The intention here is not necessarily that we know which way the market's going to go. It's just broken a key level. If we can get into this market, the plan is to get stops to break even, money off the table, a small profit, and to go into the Fed announcement with no risk on the trade. Obviously, looking for the downside, but no risk if that doesn't occur. If we get into the market and we haven't got risk off the table, we'll simply close that trade either this evening or tomorrow morning before the Fed announcement, because we're not trying to predict what will come out of it. We're just trying to position ourselves to take advantage if that happens. Now, in order to do that, I've also been looking at other equities markets. This is the DAX, the German equities exchange. Again, a very, very key level here. That's absolutely obvious by this grouping here and what have you. So again, I'm looking for a potential pullback into that level to take a short position. Again, looking to have risk off the table before the Fed announcement. And there we go, that's the FTSE 100. Duplicate exactly the same thing. Key level, looking to get in ahead of the Fed announcement, with no risk on the table. As I said, if the reason that I've spread this across 3 markets is I'm not sure any of them are going to pull back, but I'm just looking for an opportunity. As soon as I get into one of the trades, I'll assess the position and quite possibly close the orders on the other 2, so that we haven't got a multiple level of risk in that one trade. Having said that, these are relatively low risk trades because we don't have certainty in direction. It's about being in a position, sitting in a trade with no risk, to potentially take advantage of that situation. Phoenix Blue guys or traders will also know that we've been focusing to a certain extent recently on commodities, simply because we haven't had a lot of direction in the FX market until the Fed do something definitive. That could continue, and as a professional trader, you need to be in a market or in the markets looking for opportunities, high probability opportunities. Now, we key into this because we're specialists in the commitment of traders analysis, and that really is key when trading commodities. This is soybeans that we got an entry into yesterday. We've obviously got a falling trend line here. We've got a key level, and also we have a COT analysis, which is telling us that the market has potentially topped at this point. We also have a seasonal bias based on probability over the last 20 years that the market at this time of the year would normally move to the downside. So a number of factors that we're combining there. You'll see that with these type of trades, we take a lot bigger stop to entry level, simply because these markets don't move like FX. They're not as accurate, they are more volatile, but they are longer term. Soybeans, for instance, I'm looking at this market through to the end of July. I've got a T2 target down at this level here, so you can still see, that might be a 4.5% trade. If it was came right down to that level, it will take longer to do that. But interestingly, because this is a futures market, there are no overnight charges on futures, so you don't build up a cost with your broker, so the timescale isn't costing you money. We're also long cocoa. We were long cocoa on a commitment of traders signal, bottom signal here in January. We made money as the market rose through there. We're back in the market from this level. The reason for that is seasonality, the trend line, and as you can see, price has moved away. Now it's moving away quite nicely in the last few days. Volatility certainly in the early days and around this area, but that's why the stops have to be a lot bigger than they are on FX. But again, that's a nice position. We're long cocoa. That will mark our first level for taking profits. We don't look in this on commodities to get into a trade and get money off the table and get risk so much off the table, because we are using bigger stop losses. We're letting the market run. That will be money taking off there. Price comes up to the top of the trend line. We'd look to take more money out of the market there, and our end target is the highs from over here. Obviously, through the period, we're looking on a regular basis to try and scale into the position in order to build a nice position and be able to take the profits at those levels. We're also at this moment in time short on the corn market for exactly the same reasons. We've got a commitment of traders signal, we've got seasonal bias and a key level, and a price action reversal at that point. Okay guys, so what we're looking at here for those who are new to Phoenix Blue is what we call our pure analysis system. You'll see the clean charts. We're using price action horizontal levels. We don't use indicators. We trade with a fundamental bias. Commitment of traders analysis is particularly critical with what we've been talking about a moment ago about commodities, and also the seasonal analysis. If you've got any questions, you can pop onto the website phoenixblue.co.uk or email us at info@phoenixblue.co.uk. Okay, right, let's look forward to a nice day in the markets. Trade cautiously, very cautiously ahead of the Fed announcement. And we'll look to speak to you in the morning ahead of tomorrow. Okay, take care and have a great day.